Leasing. Leasing or lease is a contract between the lessor, the owner of the asset, without acquiring the ownership of the asset. The lessee cannot become the owner. The cost of repairs and maintenance of the leased asset is generally owned by the lessor. Under purchase option, you have to pay how much? 7,66,798. Hello, I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College at Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester, Unit 5, Session 1, in favor of leasing. I am going to explain what is leasing, what are the types of lease we have got, and how to solve the problem when the lease is happened. So we'll move on to problem now. Leasing. Leasing or lease is a contract between the lessor, the owner of the asset, and the lessee, the user of the asset, whereby the lessor gives the right to use the asset to the lessee over an agreed period of time for a consideration called lease rental. So there are two parties here. One is the lessor, one is the lessee. Lessor is the owner, whereas the lessee, the user of the particular what's called rental value or particular patent right, he is going to use of the lessor. Here the word, the user of the asset, whereby the lessor gives the right to use the asset to the lessee an agreed period of time. It may be 1 year, 2 year, 4 year, apart, for a consideration called lease rental. So every month, he has to pay the rental value. He can use that. It is an agreement between whom? Lessor and the lessee. Characteristics of leasing. It is one of the method of intermediate and long-term financing. It is an arrangement which separates the ownership of an asset from its use. That means it provides the right to use the asset without acquiring the ownership of the asset. The lessee cannot become the owner. He can utilize the asset for a period of more than 1 year, 2 years, with the permission of the lessor. The lessor transfers the right of use of an asset to the lessee. The ownership of the lease asset remains with the lessor. So it is what's called who utilize, the lessee utilize, but ownership lies with the lessor. That's the most important. The consideration for the use of an asset is called lease charge or lease rental. So the lessee has to pay by rental charges for use of that particular rights. The lease rental is predetermined and payable periodically. Once in a year, they have to pay by. The lessor is the legal owner of the leased asset. Therefore, at the end of the lease period, the lease asset is transferred to lessor. Once you utilize, when the period of agreement is over, lessee will be transferred the same to lessor. So the two parties agreement is, one is the lessor, one is the lessee. Once the lessee period is over, lessee transfer the same asset to the owner. Characteristics of leasing. In the case of a long-term or financial lease, generally the lessee is given an option to purchase the leased asset at the end of the lease period. On the other hand, this option is not available under operating lease. So here, at the word, see the word, in the case of long-term or financial lease, generally the lessee is given an option to purchase the leased asset. So here under this method, a chance will be given to lessee to purchase the asset. The lessor, being the owner of the asset, is entitled to claim depreciation and investment allowance for the purpose of income tax. The lessee can claim rental charges for the purpose of income. For the sake of the purpose of income tax, he can claim depreciation and investment allowance for the purpose of income tax. Regarding the lessee's concern, he can what's called claim for the rental charge. Under financial lease, the lessee has to bear the cost of maintenance and upkeep of the leased asset. Under operating lease, the lessor has to bear the cost of repair, maintenance, and upkeep the leased asset. Under operating lease, the risk of the obsolescence, that is change of fashion, is borne by the lessor. On the other hand, under financial lease, The risk of obsolescence, generally change of fashion, borne by the lessee. This point to be bear in mind. Under operating lease, the risk of obsolescence is met by the lessor. On the other hand, under financial lease, the risk of obsolescence is met by lessee. Operating or service lease. It is a short term, generally for a period of 3 to 5 years. The lease period is generally less than useful life of the asset. It is usually cancelable. It is cancelable at the option of the lessee or the lessor. It can be cancelled either the option of lessee or lessor. The cost of repairs and maintenance of the leased asset is generally borne by the lessor. Repeat, the cost of repairs and maintenance of the leased asset is generally borne by lessor. It is a short-term cancelable lease, therefore it involves high risk and high rent. So it's a short-term payment, the rent generally will be high. The risk of obsolescence remains with the lessor owing to the shorter duration of the lease and the option of the cancel leased by the lessee. Financial lease, a lease that ensures the lessor for amortization of the entire cost of the investment and expected to return on capital during the term of the lease is called financial lease. What is financial lease? A lease that ensures the lessor for an amortization of the cancellation of the entire cost of the investment and expected to return on capital during the term of the lease is called financial lease. So we'll go with the problem now. Who is the lessor? The owner of the particular right. Lessee, the utilizer of the asset. ABC Company Limited has to acquire asset worth rupees 10 lakh, for which it has two options. It can acquire the asset by taking the bank loan at 15% per annum, repayable in 5 equal installments of which 2 lakh each, plus interest, or to lease in the asset are payable at the end of the year. It provides depreciation 15% as a written down value method. The company is in 30%. This is important, 30% bracket, and discount the cash inflow at 16%. Discount factor 16% is 0.862, 1 rupee now valuing how much money? 86 paisa, second year 74 paisa, third year 64 paisa, fourth year 55 paisa, fifth year 0.476. So this is a problem. Now, here what are the steps to be followed? Steps. 1. Calculate depreciation under number 1, fixed installment method. Fixed installment method. First step, they have to calculate the depreciation under fixed installment method or diminishing method. So what's the first step? First, they have to calculate the depreciation under straight line method, whereas the depreciation remain constant. Diminishing means it goes on decreasing year by 1 lakh, 10%, 10,000, 90,000, on 90,000, 10%, 9,000. Here it is also 1 lakh. So here depreciation is the cost of the asset minus scrap value divided by the life of the asset. Here they will give the percentage. So every year it goes on diminishing. First step. Second, calculation of interest. Number 3, calculation of cash inflow. calculation of cash inflow. Number 4, calculation of cash outflow. Fixed installment method or a diminishing balance method, calculation of interest, calculation of cash inflow, calculation of cash outflow. Number 5, leasing or rental value. These are steps to be followed. So we have to find out either the lease is better or purchase is better. We'll move on. Value of the asset beginning is 10 lakh. What's the percentage they have given in the problem? 15%. So first year 10 lakh. 10 lakh into 15, 1 lakh 50. What's left over? 8 lakh 50,000. On 8 lakh 50,000, 15 by 100 is 1 lakh 27 500. If we deduct, it becomes 7 lakh 22 500. 7 lakh 22 500, 15% is 108 375. How much left over? 6 lakh 14,125. Fourth year, 16 on that 15%, 92,119. If we deduct this figure, it is 5 lakh 22. From this figure, deduct this, it becomes 5 lakh 22,006. Fifth year, 5 lakh 22,000 on that 15%, 78,302. It will come 4 lakh 43,705. So 10 lakh become 4 lakh 43,705 at the end of the fifth year. First year division, second year division, third year division, fourth year and fifth. This is the first step. One, calculation of cash outflow. Loan amount 10 lakh, interest is 15%, 1 lakh 50,000. Every year they are payable 2 lakh, 2 lakh plus 1 plus. So it comes to 3 lakh 50,000 in the first year. On out of 10 lakh, how much you pay principal money? 2 lakh. Balance is 8 lakh. On 8 lakh, if 15% means 1 lakh 20,000. Every year how much they are paying? 2 lakh. 2 lakh plus 1 lakh 20,000 is equal to 3 lakh 20,000. Third year is 6 lakh. On that 15% is 90,000 plus 2 lakh 90,000. Next year 4 lakh. So 60 here. 15% is 60,000. 2 lakh plus 60,000 is 2 lakh 60,000. So 2 lakh. Third year, how much balance is? 2 lakh 60,000 and 2 lakh. 2 lakh 15% is 30,000. 2 lakh plus 30,000. 2 lakh 30,000. So this is your cash outflow. First year, how much you pay? 3 lakh 50,000. Second year, 3 lakh 20,000. Third year, 2 lakh 90,000. 2 lakh 60,000. 2 lakh 30,000. So the cash is going out. Now, come back. Calculation of cash inflow. So the provision will be given. What's the division? 1 lakh 50,000. How much first year interest? 3 lakh. How much tax bracket? 30%. So a chance is given. So we can avoid tax. 30% becomes 90,000. So then 1 lakh 27,000 division. 1 lakh 20,000 interest. Totally 2 lakh 47. 30% is 74,250. This is inflow. Tax saving. Inflow is there. Then 108,375, 90,000, 1 lakh 98,375, 30% is 59,513. Then 92,119 plus 60,000 is 1 lakh 52,119. 30% is 45,636. 78,301, 30,000. 1 lakh 8,1,301 on that 30%. These are all the inflow, cash saved, tax saving. These are all tax saving. Cash is coming in now. Now, next step, present value cash outflow under purchase option. So, how much cash outflow is? 3 lakh 50,000. What's your cash inflow is 90,000. Net cash flow is 2 lakh 60,000. Here your cash inflow 90,000, 3,50,000, inflow is 90. How much net is 2,60,000? Your discount factor 3. Multiply this. It comes to 2,24,120. Second year, 3,20,000, 74, 250. It becomes 2,45,750. 750 if we direct, outflow minus inflow. Net amount 2,45,750 into 0.743. It works out 1,82,592. Next year 2,90,000 minus 59 is outflow. This is inflow. What's the net amount? 2,30,487.641. 1,47,742. Next year 2,60,000 minus 45,636 is equal to 2,14,364 into 0.552, 1,18,329. Fifth year, 2,30,000 minus 32,490 is equal to 1,97,510. Discount factor 0.476. It works out 94,015. So total present value summation 7,66,798 under purchase option. Under purchase option, you have to pay how much? 7,66,798. Then, if you take the option of lease, cash outflow under lease option, every year you are paying the rental value of how much? 3,24,000 as per the problem. Cash inflow is 97,200. Tax at 30%. 30% of this. This is on this 30%. So if 30% deduct, outflow, inflow deduct, 2,26,800.62, 3,24,000 minus 97,200. Every year this remains constant, 97,200. Rent remains same. In what's called tax savings remains same. So the net amount 2,26,800, 2,26,000 remains the same, multiplied by discount factor. It comes to 1,95,502, 1,68,512, 1,45,379, 1,25,194, 107,600. If we add all four, Sigma present value is 7,42,544 as per the lease option. As per the purchase option, 7,66,798, which is more. Purchase option is more, lease option is less. Conclusion, as per present value of cash outflow under lease option are lesser than present value of cash outflow under buying option, it is advisable to take the asset on lease. Conclusion, as per present value of cash outflow under lease option are lesser than present value of cash outflow under buying option, it is advisable to take asset on lease. So come back one by one. What's the present value? First step, fixed. First one, you go with the depreciation. First step to do. Then you have to calculate the interest. Then calculation of the cash outflow. Then inflow, depreciation plus interest totally. Tax saving is 30%. Net cash flow under purchase option, 3,50,000 is going out, 90,000 is coming in, this is going out, cash is coming in, net amount is 2,60,000, discount factor 0.862. So same thing you have to do for how many years? 5 years. Total amount payable under purchase option is 7,66,798. If you go with the lease option, every year rental value is 3,24,000. 30% is 97,200. Deduct 2,26,800 multiplied by discount factor. So it works out 7,42,544. So if we compare, lease option is less than purchase option as per the present value of cash outflow under lease option or lesser than present value cash outflow under buying option, it is advisable to take the asset on lease. Hope you understand this. Very easy. Very easy. One problem will become under lease. So same type of problem we're going to solve in the next session also. Till then, goodbye. Meet in the next session with another problem. Till then, say goodbye. So hope you understand this problem.